right, welcome everybody back to another episode of the Study Wealth podcast. This time here, fireside it is, after all, the holiday season. What I did this week is I made a video for our clients and actually the public as well, and I talked about the leading indicator qualities of Bitcoin. And I just want to preface this by saying this is not a pro Bitcoin comment or anything with laser eyes or anything silly like that. This is purely just really looking at factual data right now. And of course, I don't have a crystal ball either, but I do think there is some pretty notable tell to this. What I talked about specifically, and I'll show you and talk about this chart here in a few minutes, but I talked about the leading indicator quality of Bitcoin as it relates to liquidity. Now, that has two parts to it. One of them is the liquidity that is in the market being supplied by the central banks, and then also the sort of ease of being able to push something like Bitcoin around because it is less liquid or has less volume than some other asset classes out there. So has two parts about that. But before we even look at that and we go into a chart, let me spend a couple of minutes on some other reasons why Bitcoin has been, I should say, and not for just like 6 months or anything, has been a pretty good, if not a very good leading indicator to risk assets. It's a risk on or risk off indicator. One of the first things is just general, what we've been able to see, risk sentiment. Bitcoin is often considered to be a sort of risk on asset, meaning that during times of increased risk appetite, investors tend to be more inclined to go further out on the risk curve and add to or purchase or trade things like Bitcoin. This sentiment can extend to the broader financial markets then ultimately, right? With increased risk appetite potential will tend to lead to increased higher prices in risk assets such as equities and Bitcoin. And I'll show you and talk about the leading indicator quality of that here in a minute. Sentiment in the cryptocurrency market as reflected in Bitcoin's price movements can sometimes serve as a gauge for broader market sentiment. If the Bitcoin exchanges experience significant price volatility or sudden surge, it may indicate a period of more pronounced speculation and risk behavior. So that can also spill into the equity markets. Inflation hedge. This is a big one, and it's one that I think is hotly debated and potentially misunderstood, to put it that way. But Bitcoin's often touted as a hedge against inflation, not too dissimilar to gold. In times of inflation concerns, investors might flock to Bitcoin and other alternative assets, and that could signal broader concerns about the purchasing power and economic stability, potentially affecting the stock market as well. So let me pause there a minute and go a little bit deeper. A lot of people have deemed Bitcoin to not have acted well versus as an inflation hedge. I would argue the opposite. I would argue that Bitcoin protected very well against and saw inflation coming way before other risk assets did. So what we actually saw is Bitcoin have a major surge, basically bottoming out more or less along with stocks. And this was more coincidental. This was not so much leading, but the magnitude of the increase in Bitcoin, particularly as we saw it in late 2020 heading into 2021, was really the leading indicator to inflation. Ultimately, Bitcoin topped 2021 because inflation expectations also actually came down. So Bitcoin, at least in my humble opinion, actually did foresee that properly. And again, we'll dig a little bit deeper into its leading indicated quality to the equity market as well. Also, when we talk about Bitcoin, investors seeking diversification do tend to, and I'm talking about true diversification, not within the equity market, but away from other alternative assets, including cryptocurrencies like crypto, that can be a leading indicator and can be increasing the popularity of Bitcoin. So that too can lead to leading indicator qualities for the equity market. Technological innovation trends, if you think about Bitcoin and blockchain technology, they are at least among the forefront of technologies of financial innovation, and that increased adoption rate in these technologies can also speak to broader trends toward embracing innovation in finance, for example. So there too, that can be a leading indicator. And then, of course, macroeconomic trends. I really do believe that Bitcoin has, particularly since the pandemic, become an asset uh, that is part of macroeconomic analysis, meaning it gives us leading indicator qualities, and it's something that reflects the debasing of currencies and other things out there that we have in macro land. Let's put it that way. Otherwise, we'll quickly go down into a rabbit hole. But if you think about investors turning to Bitcoin during periods of global economic instability, it might indicate a flight to safety that could impact traditional asset classes, including equity. I think that is certainly something that the economic ivory towers have increasingly or are in the process of adopting, is probably a better way of putting that. With that, let's go a little bit more detail into one part of economic analysis as it relates to, or chart analysis maybe as it relates to the Bitcoin versus risk assets. And let me introduce you to one particular chart. And if you're watching this on YouTube, you'll see the chart. If you're just listening on one of traditional podcast outlets, I will describe this, as I always say, just as well, so you will not be missing a thing at all. And what I'd like to share with you is really a very clear example of essentially Bitcoin doing exactly what I'm talking about here, which is leading the equity market. What you'll see here, quickly show you this, is a chart, or it's two lines really more specifically. One line is the S&P 500, that is the orange line. The other line is the price of Bitcoin. And let's just start off with where we were coming into 2022, rounding off 2021. And what we saw, if you follow the blue line, again, the blue line is Bitcoin, you can see that Bitcoin topped specifically about 2 months before the equity market topped. So the blue line, you can see, topped in November 21. The orange line, S&P 500, topped, let's call it a month and a half later in late this, really, it was early January. So very clearly, the price of Bitcoin saw something changing. And what the price of Bitcoin saw is inflation expectations coming down, and us heading into a more risk-off environment because of the consequences embedded within higher interest rates that the Fed might not react to immediately. If you fast forward to late 2022, what you'll see is that the price of Bitcoin ended up actually bottoming for the most part in around November of 22, and the equity market ultimately actually even this, but we started to see, in rate of change in momentum terms, a much more meaningful move higher in Bitcoin. In fact, the acceleration higher in the price of Bitcoin is really what led and told us earlier that the equity market would start to bottom. And then even if we look at just something very short term, like here in 2023, over the past few months, you can see Bitcoin actually bottomed in the middle part of September. Again, that's the blue line. Started breaking out in the middle part of October when equities were still faltering, until finally equities bottomed on Friday, the 27th of October, and started a massive risk-on rally. So again, whether we're looking at this through a multi-quarter lens, arguably a multi-year lens, or even a multi-month short-term lens, the price of Bitcoin has been a leading indicator for equities, and we would expect that to continue going forward as well. As it relates to the right here, right now, if for those people that can see the chart, what I'm really showing here is that more or less Bitcoin and equities are at the same spot right now. So Bitcoin is not showing us, as of right now, any particularly leading qualities other than it just keeps going higher. We're not seeing any divergences just yet. This in part could be because we are expecting an ETF approval either in December here or heading into the new year. And of course, on that news, it's possible that Bitcoin either sells off or rallies further. And that, I know that sounds like an idiotic comment because it's like anything can happen, and that's true. But ultimately, that's something that's now putting Bitcoin into a little bit of a tailspin, up or down, because there is a major inflection point for the cryptocurrency markets. And by the way, we had the news on Binance, if you follow that stuff, last week as well, which was quite a bit of a watershed moment as well. So there you have it. And this is not a recommendation, as always, just an idea, but we do actually own Bitcoin for our clients in some of the portfolios. I personally own some of it for diversification purposes. This is not an all-in laser eyes call, not even close. But it to us, from a macroeconomic analysis perspective, does make sense to own a little bit of it. Again, it's a volatile asset. It's still in its infancy. It does make sense to own some of that in a from portfolio context. So we'll see, but I do think ultimately going forward, Bitcoin will continue to be a leading indicator. And if equities were to continue to hold on here and Bitcoin ultimately were to go lower, I think that would be, for what it's worth, a leading indicator this time for the equity market from Bitcoin as well. So with that, I hope this is helpful, folks. Have a wonderful week, and we'll see you again in the next Steady Wealth podcast.